Well, our next guest says that despite what it looks like, the president is not trying to run the economy off a cliff. He says it's worth noting that despite trade tensions, the S&P is still up handily for the year. Joining us from Los Angeles is Chris Armbruster. He's Kayne Anderson Rudnick research analyst. Thanks for joining us. So presumably you were listening to some of the president's comments there in France about China and about the trade situation. He has remained pretty steadfastly confident that at some point we'll get a deal. Do you think that the market's continued rally on the year is contingent on that? Is it necessary?
I don't know if it's necessary. I think that the bond market is telling the Federal Reserve kind of unequivocally that they're too tight right now, probably by about 50 basis points. They haven't really factored in this trade war into their economic policy so far, and we think that in general over time they will be a little bit proactive about setting policy to the point where they will support Trump's trade initiatives. And we think that while the trade war has put the economy on a little bit of unsteady footing in the short term, we think over the long term, this is just going to be another kind of blip in the radar in terms of economic growth.
Yeah, well, let's talk about that kind of economic growth. What do you think, what factors would need to contribute to that in your view?
So I think in general, if we can kind of defray some of these trade tensions, business is pretty good for a lot of companies, especially in the United States. The consumer is strong. Corporate balance sheets are in good positions, and generally the domestic economy is relatively robust.
Chris, this is Todd Buchholz. I don't know whether you had seen the news about the apparent trade deal with Japan that Trump has negotiated, in which case the Japanese are slashing their tariffs on beef, corn, and other farm products in exchange for what? In exchange merely for Trump to remove the threat of raising car tariffs on Japan. Wouldn't you think that this would give Trump more confidence that he can get a deal from China if he was able to get a deal from Japan merely by removing a threat as opposed to actually granting something to them?
Right. And this is part of kind of his negotiating tactics. I think that he understands that, in order for him to get reelected, which I think that he very much wants, the economy needs to be on strong footing. And he knows that the trade deal, if we have no progress on any sort of trade, is going to be a big negative in the eyes of many voters. So he's going to take victories like Japan, like we had with NAFTA, and kind of use those as a basis for confidence for him, moving on to the bigger fish, namely China.
Now, I don't think it's fair to say that you guys are agnostic about these issues, but you all are stock pickers, so you're looking at companies that you feel have robust businesses, perhaps regardless of what's going on. One of the stocks you like is a fairly recent IPO. It's called Grocery Outlet. It's climbed pretty well since its IPO. Do you see it as sort of resistant to all of these factors that we're talking about?
Somewhat. And I think that's really important for us is kind of applying our consistent investment philosophy regardless of economic cycles. Up markets, down markets, we believe that high quality companies are going to be able to better weather downturns and be able to prosper when the upturn happens. And Grocery Outlet is a great example of that. So we've had success in the past with these treasure hunt type of disruptive retail experiences. TJ Maxx and Ross, for example, come to mind. And Grocery Outlet is that applied to groceries, which is the largest consumer spending category. They're only about 7% penetrated in their ultimate store expansion. And what they do is they're able to opportunistically source products, whether they're overruns in production, closeouts, discontinued items, and pass those extreme value savings on to consumers, sometimes 40% plus. And so, maybe it's a little bit counter-cyclical, but we think that they have a nice head start with vendor relationships. And we know that when TJ Maxx and Ross went through their sourcing expansion, it really improved the merchandising in the stores, drove a lot of consumers into those stores. And that retail concept, I think, is able to, kind of hold gross margins steady in an industry where there's been a lot of gross margin pressure for the traditional players.
All right, well, we'll check back in with you and see if it continues to rally. Chris Armbruster, Kayne Anderson Rudnick research analyst, thanks.
Thank you.